Hi, I'm Tom Hoskins, editor of Mining Journal, and I'm here with Fred Bell, who's the CEO of Elemental Royalties, which is a gold royalty company listed in Toronto. Hi, Fred. How's it going?
Hi, Tom. Very good. Thank you.
Excellent. So Fred's going to give us an update about what's been happening at Elemental, but for those viewers who are not familiar with Elemental as a company, Fred, perhaps you'd like to start with giving us a brief overview of what it is you do.
So we're a royalty company focused on the precious metal side. We were private for the first 3 years starting up, and we listed in the summer of 2020 on the TSXV in Canada. And I think the sort of one-line summary of Elemental is that we're a fast-growing royalty company with a heavy weighting towards cash flowing, producing royalties, which is probably the biggest differentiator that we have.
Thanks, Fred. And the royalty model offers a better way, or you would say offers a better way to get exposure to gold for investors. Why is that?
I think that with a royalty company like Elemental, you get that unusual characteristic of, in our case, diversified revenue from the outset. And so even if you go to some of the mid-tier mining companies, $500 million, billion-dollar companies, they might be very weighted towards one or two assets. And with a royalty company, it's actually a model that is very easy to scale and to diversify. And if you can have diversified revenue, it really helps to de-risk the company. And so for Elemental, what we're offering is we're offering a company that has doubled its revenue year on year since we started, and in a business model where we can be more diversified than mid-tiers or majors can. And if you can do that, you're offering investors, I think, a really attractive way to participate in the mining sector without some of the asset specific or jurisdiction specific risk that you often get.
Yeah, and you're quite unusual in the fact that you've got a portfolio of cash flowing royalties, and not too many, if any, royalty companies with smaller than 500 mil market cap. How are you where you are right now with what you've got in your portfolio?
I think as a general rule, it's the holy grail for royalty companies is you want cash flowing royalties, and it's the hardest thing to do. And so our view was that if we can do that from the outset, and we can list a company with a foundation of high quality cash flowing royalties, it gives us a fantastic platform to build a company from, and to be able to use that revenue to invest in future royalties, to be able to get access credit facilities with some of the bigger banks. And it's definitely unusual. I think if you look in the space, there's no one below a $500 million market cap who has material royalty revenue. And I think we're as a $100 million company. I think that's where we really stand out, and I think that's what gives us what I would call an asymmetrical risk profile. We've got limited downside from diversified revenue, but we've got all the upside of we have demonstrated a growing 100% year on year in terms of revenue. We've increased the share price every time, and I think really importantly, the royalty model is very scalable. If you're adding new royalties in, it is a really it benefits from that scale in a way that often mining companies don't. And that's why it's a great business model, and the best way to play it is if you can get a smaller royalty company that has that runway of growth, but also has a downside protection that comes from good quality producing assets.
Okay, and I mean, I'm interested in the deal you did with South 32 because for a company of your size, it's a sort of big deal for you guys. They're now your largest shareholder. Can you talk a little bit about that deal? How did you persuade them to sell it to you?
Well, funnily enough, it's actually we probably approached them as a startup, $4.5 million market cap private company a few years ago, and fast forward a few years, and we had listed and were much bigger, and I think had followed through on a lot of what we said, and the opportunity came up to acquire the precious metals royalties that South 32 held and had come from BHP. And it's the second time that a royalty owner has sold their royalties to us and taken a material equity stake in the company. And I think it's the same reason both times, which is if you're a royalty owner, you can see the value uplift and the value that you can create by putting your royalties together into a diversified portfolio where you have a lot less risk across it. And that's been a proven business model across the space, not just in the last 5 years. Going back to 2010, there's a dozen royalty companies in the 2010 to 2015 period, most of which were acquired in M&A by the majors in the space, who I think demonstrated that point really well. And we're sort of in the phase now, and the first M&A deal in the royalty space was just announced recently, and I think there's probably going to be a sort of similar pathway over the next year or two again in the royalty space.
As someone who obviously follows the sector quite closely, I felt that South 32 deal might be something that would really springboard you guys, certainly in terms of share price, but it hasn't really happened. Any thoughts? I mean, has COVID been a big problem for you? Obviously, you're London based and you can't get over to Toronto. How big a factor is that? And do you have any other kind of explanation for what's been going on there?
Well, it's certainly unusual having been private, based in London, as you said, and then listing in Canada, but doing it remotely. And I think probably last year in 2020, we thought we'd be able to go over to North America and market in person. And a year on, and it still hasn't happened. So I think as time goes on, it's more of a challenge, because you have to, I think, especially for a new company like us coming to market, it's really, really important to get that face time and to introduce the story to people. And the background of the company is really important. How we built it from a startup to where we are now, which in the last decade, no royalty company has gone from a startup to $10 million a year of royalty revenue. And I think Q3 onwards, that's what we will have done. And so I think it's really important that we need to get out there and tell the story. And there's no better way than doing it in person and meeting people for the first time. I think if we can do that in the second half of this year, that will be really important for us, because I think like you, the South 32 deal it was a major transaction for us, and it is one that with the Carla Winder royalty, that is Australia's newest gold mine and has just come on stream, it's going to be a cornerstone asset for us for the next decade onwards. And I think that hasn't been reflected yet, and I think over time it will be. But it's something that, particularly as a young new company, you have to fight to make sure your voice is heard, and you have to fight to make sure your story is out there, because otherwise there's no point in being a listed company. So that aspect of marketing, and I think introducing the company to people is one that we said at the beginning of this year we really want to focus on. And the sooner, it's probably, maybe it's the same for you, but the sooner you can get over from London and you can travel to some of the major markets, Australia and Canada and the US, I think it will be helpful, and particularly where you're meeting people for the first time.
Yeah, I bet. I mean, I was thinking, there's a lot of royalty companies obviously listed in Toronto, but not many here. Has that been a consideration to give, London investors? Obviously, we've just seen Endeavour list here. That there's clearly appetite for gold mining companies. What are your thoughts on that?
We actually before we listed in Canada, we did look at London, and we looked at Australia. It was really London, Australia, and Canada as the three jurisdictions. And I think for us, the feeling was that when we were able to go to Canada for the first time, and we were private, and we introduced the story, I think people very, very quickly understood what we had done, understood what we had built, and they were very familiar with the royalty model. And in London, by comparison, in Australia a little bit, there isn't that familiarity with the model, and I think it will come with time. But our view was that starting out as, if you're looking at us today, roughly $100 million market cap company, if you have to get over that education barrier, it's one more thing that you have to sort of cross. And if we're in Canada, it's actually a market that knows the royalty space really well. And so at the time, I think a year ago, just over, I think we were probably thinking we were going to go and spend a few months in Canada, introducing the company and getting to know people and putting it out there. And with hindsight, we haven't been able to do that yet. But I think that this year, touch wood, it will be the year that actually we can do that for the first time.
Yeah, well, I hope so. Wish you the very best of luck, Fred. That's pretty much all we have time for. So thank you very much indeed for joining me.
Much appreciated, Tom. Thanks.
Okay, well, that concludes this video. Thank you for joining us. Goodbye.